Is the Chinese company Ideanomics a buy? Well, I have received this question a couple of times, either on my Patreon, here in the comment sections, or on Twitter, and long story short, no, it's not. So my friends, not everything that has the EV brand or is a Chinese company is actually a China opportunity, unfortunately. And well, I have seen an uptick in questions related to that company, so I thought let's make a quick video on that, but not so much actually on the company itself, but more about how I quickly research companies, and maybe let's do that in 5 minutes if I can, and show you how I actually look at this company and how I deem them that they are not a buying opportunity here. And I actually have to give you an important part of context here regarding this company, because an intermediary has actually been reaching out to me, so it's some kind of a consultant, wrote me an email, said that he wants to talk with me about this opportunity that I can make content on this company, and that would even be a paid project. So I went on a call just to try out how these things work, because basically I'm not making any paid content on my channel here, but I wanted to see which company they're talking about, and in the end, yes, it's Ideanomics. And they told me basically that they are, working with YouTubers, and I wanna, launch a campaign for, making maybe the stock more prominent here on YouTube. And this is already kind of a red flag for me, so I didn't look any further into this company afterwards. But now that so many people are asking me this question, I think, okay, why not? Let's give it a try. And what I first do usually is to go to the investor relations page on the company website and look into their latest SEC filings and stuff like that. And for instance, here I opened a document which is about diluting shareholders, so issuing more shares and thereby raising cash for the company. And this is also a big part of this entire story here about Ideanomics. And the interesting part here is how they describe themselves. So starting in early 2017, the company transitioned its business model to become a next generation financial technology fintech company. Okay, the company built a network of businesses operating principally in the trading of petroleum products, okay, and electronical components. All right, that the company believed had significant potential to recognize the benefits from blockchain and AI technologies. All right, I don't really get the link between petroleum products and blockchain and AI, but anyways, let's go on. During 2018, the company ceased operations in the petroleum products, yeah, petroleum certainly is not the future, and electronical components trading business, and disposed of the business during 2019. Fintech continues to be a priority for us, fair enough. We look to invest into develop businesses that can improve financial services industry, particularly related to deploying blockchain and AI technologies. Once again, okay. As we look to deploy fintech solutions in late 2018 and 2019, we found a unique opportunity in the Chinese electrical vehicle industry, EV market. What a coincidence now that EV is getting hot. So I mean, already from this overview, you can see that they are active in a couple of really hot topics: AI, blockchain, some kind of standardized trading, like with electronics and so on. That sounds more like, the old China manufacturing story here. But then also fintech and now EVs. So I don't really understand what they're doing. I don't know about you guys, but to me, this is kind of fluffy and not really on the point to what this company is actually doing. I do get that they did a couple of pivots in the business model, which fair enough, this can happen. But in the end, I mean, this also tells me that they're kind of jumping from one bandwagon onto the next one in a way. Okay, but anyways, let's give them a chance and look quickly at their financials. So I'm looking at the latest Q3 earnings report, September 30th, 2020. And first of all, what I really always like to check is how much cash has the company. They have 27 million cash equivalents. So these are kind of the liquid assets that I can use for investing or for actually paying for stuff. And on contrary to that, they have up to 50 million in actually liabilities consisting of different things like accounts payable and so on. So already their liabilities are more than what they currently have in cash. So for a small company as they are, I would doubt that this is a strong cash position, but let's look a little bit further. So in the last quarter, they made around 10 million in revenues and a net loss of around 8 million. So just some quick maths. If you're looking at the net income and compare it to their cash position here, this gives them basically almost only around 3/4 of a runtime until they would go bankrupt with the current cash position. So I do know that the net loss has been decreasing a little bit, but obviously they have to. But just given their current minimized cash burn, this run rate of just 3/4 is, in my views, not enough to be sustainable, and it calls for actually another round of issuing new shares, thereby raising cash and thereby diluting shareholders. So this means that the share price is going to drop on news of that. So I think a new cash raise will be quite likely. And when do you do that? Well, usually when the share price is going up. And of course, if you think with the context here that they are trying to promote a stock using YouTubers and stuff like that, then this sounds a little bit troublesome, to be honest here. So what I would usually like to do is look at a 5-year outline of, first of all, looking at what is the total accessible market for this company and the products, and then also, how much of that could they likely capture, and also how would this translates into revenues and possibly a break-even point. But at this point in time, I think there's already these two big red flags that for me, it doesn't make sense to look even further here. When would it make sense to take a position? Well, if we look at the valuation and they would be super cheap valued right now, it would actually make sense maybe even as a gamble to say like, well, this company could survive and then maybe turn around a business. That would possibly make sense. But let's have a look at the valuation here. So they're currently trading at $2.30, and that gives them a market cap of above $600 million US. So it's a small cap, and year to date they made around $15 million US in revenues. So maybe until the end of the year they can do, let's say, 25 million. So with a market cap of 600 million, with 25 million in revenues on the upside here, they would be trading currently at a price to sales ratio of 25, which seems that they are valued here as a high growth company, plus as something more than just a manufacturing company. Well, they say here they are active in the financial industry, so given a higher multiple, almost like a tech stock here. But then if you look at the margins here, so they make 10 million in revenues and they have only a gross profit of 700,000 US dollars. So that's only a 7% gross margin here. That's a low margin. So usually in a tech stock that can do software or something like that, you would have like really high margins, like above 30%. So it also seems to me that they're even right now overvalued already. So it's not kind of a cheap stock to get into at the current price, and thereby speculating that with a successful cash raise in the future that they could actually execute on their plans. So with those two red flags and also with the seemingly high valuation here, it doesn't make much sense for me to look deeper into the prospects of the products and services of this company. So for me, I come to the conclusion that this is not a buy. This is just showing you how you can do a quick research in only 5 minutes. What you need is only the cash position, the liabilities, the revenues, as well as the net income to get a first idea, and then from there you can go on forward. So in summary, not all of the EV stocks and some of those EV verticals are good investments only because now Tesla and NIO are up and trending, and the EV industry is certainly up and coming and a good industry to invest in. But beware, there are lots of companies out there that may seem as a good investment at the first look, but possibly they aren't. But also never trust any YouTubers out there, including me, with your personal assessment whether or not you want to buy or hold a stock. You need to rather think for yourself, and I hope this video gives you some insights how to make a quick judgment of whether or not a company is actually an opportunity there, or whether this might be a dangerous investment. So thank you guys for watching, and see you in the next one.